Hi there, welcome to Kneppy Invest and welcome to another technical update video. Intriguing times we are in. We are seeing a little bit of negative sentiment in the market right now. In fact, the XGO is at a 6-month low and there is a bit of feeling out there that we could see further downside. But I'm wondering what you are thinking right now. Is this a buy the dip opportunity? You can buy some good quality companies at lower prices than what you could have just a month ago. Or is this the beginning of a larger downturn in the market? In fact, some of the indices are not only moving towards correction territory, they're already in correction territory. Now, I'll be honest with you, I have no idea whether it's going to be the former or the latter. I don't know what's going to happen at all. And what I do is just look at the chart and let the chart drive my decision making. Well, actually, that's not true. What I do is I let charts drive my decision making, not only the XJO. And one of the benefits of technical analysis is that if you do follow your rules, you can leave your emotions out of your decision making. And that is a massive benefit because your emotions can drive you nuts in these sort of situations. Should you sell? Should you not? Should you buy? Don't know. What should I do? Some people will like to just stay in the market 100%. That's fine. But I think this can be a scary situation if you don't have rules. And what I've been doing is I've been following my rules. And because I've been following my rules and some of my trades have hit my sell point, my cash levels are starting to increase. In fact, they've increased significantly over the past few weeks. And what's going to happen if the market keeps on dropping, my cash levels will keep on rising because I'm following my rules. But if this is a buy the dip situation and the market starts to turn upwards, my cash levels will then start going down as new opportunities rear up. So that's one of the real good benefits of technical analysis is that you can just leave your emotions to the side. Just follow your rules. And if you follow your rules, you don't have to be emotional. There's no emotions. You don't have any feelings. You sleep easy at night. And that is one of the major benefits, in my opinion, about technical analysis, particularly if you have no idea what's going to happen in the future. And to be honest with you, no one knows what's going to happen. We might suspect, we might have thoughts about it, but we don't know. We just don't know. Anyway, so that is my thinking right now. I just don't know. But in saying that, the XGO and some of the other indices look really bearish right now. And this is probably the most bearish I have been looking at these charts for at least a year and a half, maybe, yeah, about a year and a half, I think, or maybe just less than a year and a half. Okay, so let's start off with looking at the Australian indices, focusing first on the XJO. And the XJO is at a 6-month low. Now, I always talk about looking at companies at a 6-month high, particularly if they're breaking out. So they are potential buys. So on the flip side, if something is at a 6-month low, shouldn't that be a sell? Maybe. So whenever I see something at a 6-month low, that's definitely not a buy, and I'm definitely going to be a little more bearish on that particular asset. So XGO has dropped a fair bit in the past week, down, I think it was 2.7%. Particularly on Friday, a really bad day, down 1.8%. Now it is in oversold territory. I had a look at this on Friday's ASX Daily Rundown video. In fact, for those who don't know anything about oversold, just have a look at RSI, Relative Strength Index. And yeah, so it is down in oversold territory. That does not mean it will bounce, but this means there's a greater chance that the XJO will bounce on Monday or Tuesday. And the very fact that Wall Street had an okay, good day on Friday's session means there is, I think, a pretty good chance we'll see a bounce. So it wouldn't be surprising to see the XGO bounce up back into this purple box. Now, this purple box is important because it was acting as a support zone. Initially, it was resistance. Now it's support, and it's broken below that purple box on pretty good strength. So it wouldn't be surprising to see a little bit of bounce for the XGO to move back into this purple box before we see more downside. That wouldn't be surprising. And it wouldn't be surprising to see a really good bounce and the XGO gets above that purple box and then stays above the purple box, which means this would be a buy the dip situation or opportunity. I don't know which way it's going to go. So really intriguing to see. But we have seen the XGO fall a fair bit since its highs. The most recent high was February 14, and it has dropped about 7 or 8% since then. And this is looking bearish. I have to say, this is looking bearish. The other thing is we're going to have a moving average crossover within the next few trading days. That's an almost certainty. An absolute certainty. We'll have a moving average crossover. And the last time the actually had a negative moving average crossover was in September of 2023. But I'll be honest with you, if you go back then, the market was going sideways. There was no trend at all. And usually if you have one of those negative moving average crossovers, it's not that negative. So previous to that, probably the most recent negative moving average crossover probably wasn't even in 2022. It probably, I'll be honest with you, it was probably just before COVID-19. It was the start of the COVID-19. That was probably the most recent negative moving average crossover we have seen. So even though the market did drop a fair bit in 2022, we didn't see any significant negative moving average crossover because before those crossovers, the market was going sideways. There was no trend. And now we are coming out of a trend. I think that's absolute truth. We're coming out of an uptrend and now it's moving lower. So definitely getting more negative vibes when it comes to the XJO. And because we've been in an uptrend for a while, I wouldn't be surprised to see a pretty good bounce. And then the XJO moves into a really good downtrend after that bounce because by the dip, investors might be out there. However, in saying that, I'm surprised we haven't seen any major bounces yet, which probably tells me by the dip has lost its, maybe not lost its steam, but buy the dip investors are probably standing back. They're a little bit wary right now because they're a little bit concerned about what they are seeing and hearing and reading. Okay, so that's the XJO looking fairly bearish at a 6-month low. What about the XSO? Slightly different vibes for this one because the XSO is not at a 6-month low. In fact, the XSO is just at a 3-month low, so nothing like 6 months. In fact, about 6 months ago, the XSO was much lower than it is now. So a little bit more strength in small caps. And when I look at the what is it called? The XTL, which is the ASX 20, you definitely can see a lot of the weakness in our markets right now in Australia is being led by the bigger companies, which is interesting to me. Anyway, so not as weak for the XSO at a 3-month low. And just by looking at this, you can definitely see not as bad as the XJO, but still heading down. And it might have actually pulled back a little bit further. So the high for the XSO was actually 19th of February, and that was 3,268. It has dropped 213 points. Yeah, so about 6 or 7%. Now onto the XTL. This is when I get a little bit of a different vibe. So this is the ASX 20. The bigger companies on the ASX, including the major banks, 5 major banks, including Macquarie Bank. We have BHP, Woolworths. So a lot of these companies would be considered by many people to be defensive, to be safe. Yet, when you have a look at this particular chart, this is a really negative one. This has just collapsed. This has just collapsed, and it's probably been led by the banks. We'll have a look at the XBK, which is the ASX 200 banks, but this is looking really negative. Now, in saying all that, the last time the XTL was at these levels was back in August. So we are at a 6-month high, but not quite as low as what we saw during the yen carry trade debacle. So we have a little bit more further to go before we get to that level. But if it does drop below that level, that would be another bearish move for the XTL. So that's that line right now. But a really negative week for the XTL. In fact, a few negative weeks in a row. 3 negative weeks. Well, actually, we'll say 2 negative weeks out of 3. So down 4.35% 3 weeks ago and down 3.2% last week. In fact, you could even say that first big down week would have been a trend killer. Could have been a trend killer. And I think we have that confirmed right now. The trend has definitely shifted. We've seen a moving average crossover. And what else can you say about this? It looks pretty negative for the ASX 20. So it seems like many investors are moving out of the bigger companies. Maybe they're moving into smaller caps, which is weird because I've been discussing how some of the micro caps share price have been dropping a fair bit. And I thought maybe there was a rotation out of micro caps into the bigger companies. Well, looking at this, not true at all. Tech, well, what do you expect with tech? It's been dropping as well. Not a 6-month low though. The last time tech was at this point, XTX, was back in November. So not quite as bad as 6 months, but 4 months, and has fallen through a support level, which was at 3,700. That happened on Friday. after you can just see the XTX just go sideways just above that level. And that was a good sign until Friday, then it broke below it. So wouldn't be surprised to see a bit of a bounce on Monday again because Wall Street, but a little bit more negative for the XTX. Now onto the banks. XBK. This was another one where we had a really big drawdown a few weeks ago, and then it went sideways for probably 6-7 trading periods, and then 3 really big down days in a row, culminating in Friday's session when it was down 2.5%. Now, unlike some of the other indices, this is not at a 6-month low, so XGO and XTO at a 6-month low. The bank sector, or the bank index, is at a 5-month low, or 4-month low. October, yeah, it's a 5-month low. Anyway, but definitely looking a little bit more bearish. We also will see a moving average crossover probably within the next, say, 3 or 4 days. And the last time we saw a moving average crossover for this one was a positive one way back in November 2023. And the most recent negative moving average crossover probably, you might say, was back in November 2021. Okay, so that's the Australian indices, and they're all looking or starting to look quite negative. Some of these are or have dropped 10%. I'm trying to remember. Definitely, I do know one has dropped 10%. Oh, the banks. The banks have dropped 10%. So it's gone from 3,962. So it's dropped 500 points. So it's well over 10%. So the bank index is in correction territory. There you go. I think maybe even XTL is in correction territory. Let's have a look. The high was on the 14th of February at 4,856. Now it's at 4,427. So we're talking about 430 points. Oh, close, very close, not quite. It's close, not quite. So 430 divided by 4,856, not quite 10%, but nearing that level. But definitely the banks are in correction territory. Okay, so that's the Australian indices. Now let's move on to the American ones. And we had a good end to the week. Now, bearish on Australian indices. I'm not quite there with the American ones, however, starting to look a little bit more bearish. Now, if you have a look at the NASDAQ, this is the daily chart, has fallen through a little support level. That was about a week ago. Has dropped about, what's that? That's probably, this could be in correction territory. It's very close. It's dropped 2,000 points. Oh, it has to drop another 200 points for it to be in correction territory. A nice little rally. In fact, it was in correction territory on Friday's session. By the way, on Friday's session, there was a nice little bounce during the day. It had fallen a fair bit, and then it started to bounce at about 3:20 a.m. Brisbane time. AM, yes, AM. Before that, it was actually down. So a nice little rebound in the markets, maybe because it was oversold. I don't know. Maybe there was some news flow. Now, when you look at what's happened with the NASDAQ over the past few weeks, it looks not as bad as what we saw in July. Yeah, July. NASDAQ fell a fair bit. So this happens on occasion with the NASDAQ. So not quite as bearish as some of the Australian indices. And we did see a correction back in 2023. And of course, a much larger correction in 2022 because of rising interest rates. But definitely not that negative. We're not in that sort of negative territory right now for the NASDAQ, but maybe we're moving towards that area, almost getting to a moving average crossover as well. Dow Jones, probably, yeah, I'm not negative with Dow Jones just yet either. There could be an argument that the Dow Jones is in a consolidation period. It's going sideways. There's no trend, and that's been happening for maybe 3 or 4 months. If it does fall below 40, what's this level here? Around about 41,800, that would be a fairly negative move, and more than likely we'll see a moving average crossover. But if we get above 45,000, that'll be a positive move. So at this point in time, I have no opinion about the Dow Jones Industrial. It could go lower, might be. It could go higher, maybe. I just want to see what happens. Yeah, just let what happens drive my decision making. Now on to the Russell 2000, and completely different when it comes to this one. So NASDAQ, Dow Jones, I'm not really that negative, not really that bearish, but I am massively bearish when it comes to Russell 2000. So small caps in Australia not looking as bad as the larger caps, but you can't say the same thing in America. Small caps looking absolutely horrible. So this is the Russell 2000, which is a small cap index, and this has just turned ugly. Russell 2000 has or did get to a 6-month low, just like the XJO. This purple box was the important zone for the XSO, and it just collapsed below that on strength as well. And it was up 0.43% on Friday's session, so not quite as good as NASDAQ, but this could be just a one-day bounce. This looks really negative. Also moving average crossover a few weeks ago. So unfortunately, this looks really bad for small caps. Sort of like, yeah, I reckon if I had to choose all the indices I've looked at so far, this would be among the worst, maybe alongside banks or XTL. In fact, maybe XTL would be the worst one. Yeah, I'm going to say XTL, banks, or the Russell 2000. Okay, now on to some international indices, starting off with the Nikkei. Starting to look a little bit negative, Nikkei. Starting to move down after not really doing anything for a year or so. So we've also had a moving average crossover. I'm not going to include the last negative moving average crossover, which was during the yen curry trade debacle. So this is starting to look a little bit more negative for the Nikkei. Yeah, so it has moved into a short-term downtrend at least. Now the Hang Seng, completely different. This one just keeps on going up. It looks pretty good. Probably my favorite indice right now based off the chart. So nice looking chart for the Hang Seng. I believe Alibaba also had a good week, and maybe that's one of the reasons why it's rallying. Yeah, so Alibaba had a really good day on Wednesday's session, up 8.61%. And this chart looks absolutely stunning as well. Onto the DAX. If there is one indice that might challenge the Hang Seng, it possibly is the DAX. As someone did mention in my comments, the DAX is being led by SAP, which is a software company. Here it is. And there is a bit of a correlation. Well, actually, recently there hasn't been. SAP has pulled back, while the DAX hasn't. Has pulled higher. I wonder if this has something to do with the change in government, and they have significantly increased the spending on defence. I think not only Germany, but also a European Union. The defence spending EU, there was some sort of thing. EU agrees to boost defence spending by 800 billion euros. So that's really interesting that they're massively boosting their defence spending, rivaling United States maybe. Yeah, watershed moment. EU leaders agree plans for huge rise in defence spending. I think they are fearing what's going to happen with Russia, and it's a pretty big force, the EU. Probably could, if there was a worldwide war and it was EU against China versus Russia versus USA versus New Zealand versus Fiji versus Djibouti. We all know Djibouti would win that particular war. It's without question. But who would come second? So if we're playing a game of risk, who would come second? I'm thinking EU. I'm sorry, all the rest. So you come second after Djibouti. Maybe New Zealand. I think New Zealand could do well. By the way, I'm leaving Australia out of this because, come on, we'll just go on whoever. We'll just, we'll follow Djibouti, whatever they do. Anyway, so that's DAX and FTSE. Something to the FTSE. FTSE has pulled back in the past week, but this actually doesn't look that bad. Maybe this is the buy the dip situation for the FTSE. So those who want to play footsies with their loved ones can do that on the FTSE. Now on to commodities. So we'll start off with, we'll stay on the daily chart, and we'll start off with gold. Gold, actually, if we do have a look at the weekly chart, it looks like it was up a little bit. Yeah, it was up. Good week for gold, up 1.83%. I won't go through all my gold companies, or not my gold companies, all the gold companies in my gold watch list, but I can't ignore West African Resources. This is probably that's a weekly chart. By the way, up in the week, up 27.4%. And that is the chart. So I do have this. I wanted this as a longer term hold, but this is a breakout. That looks like a breakout. Anyway, not all the gold charts look like this, but a lot of gold charts look pretty good. I have another look at Bellevue Gold because this has been popping up on some of my lists or some of my screeners, and I can see why the price of Bellevue Gold has reached a 3-month high almost, and maybe we're starting to see a bit of a trend turn in this particular company as well, because share price has fallen a fair bit. So this has gone against the upwards trend in gold. And that's interesting. When you see a gold company go down, or gold prices go up, there's a disconnect there. And I'm wondering why. So something's company specific, more than likely. Anyway, so back to gold. What can you say? It still looks pretty good. Daily chart looks good. Weekly chart still looks good. No complaints from me. And silver. I definitely want to see silver get to long-term highs, which means it has to get above $35. It's not quite there just yet. It needs to increase by another 10%, but not negative either. So definitely not negative about this one, but I'd like to see it rise and continue its uptrend moving forward. So silver, I think looks pretty good. Not as good as gold, of course. Copper. Copper had an amazing day on Wednesday. What was it up? It was up. Copper was up 5.2% on Wednesday, and it is at an interesting level. So right there, I'll put a line there. So this will be my second line. So in fact, I'll get rid of this line here. So that's an interesting level for copper. Copper reached this level back in September, reached it again on the 14th of February, which was a high point in the markets, by the way, and also has reached it again in the last few days and then has pulled back. So obviously that level is really important for copper. We need to see it break out above that. But otherwise, this is a nice looking chart, particularly if we get that breakout. Copper is in a rally, is in a nice little uptrend or developing uptrend, and I just want to see it get above that level. And the reason I want to see it get above that level because we need a higher high. That's a whole definition of an uptrend: high highs and higher lows. Anyway, so that's copper. Copper play on the ASX. I think Sandfire would be listed as the most common or the bigger one, and Sandfire chart looks pretty good as well. Maybe you watch Aries Resources, smaller copper play, not as good chart. Hillgrove Resources just did a copper raising, was a shareholder, then I sold because chart looks horrendous. And there was a copper company, was it Capstone? This was a Canadian copper company that listed on the, Capstone Copper. I've never heard of this, but then I read a story how more and more Canadian mining companies are listing or dual listing on the ASX. And they mentioned Capstone Copper, which I've never heard about. And is this a potential trade? No. No, it's not. In fact, the share price is at a low since they listed, which was well over a year ago. Actually, no, not well over a year ago, about 1 year ago. Okay, so that's copper. What about iron ore? Iron ore was actually looking pretty good a few weeks ago. So it's on about early February, late January. It was looking good, looking like it was wanted to move into an uptrend. And then we saw a pretty bad week or two, and it's dropped below or right on $100. So I look at this chart and go, nothing to see here. There's no trend in iron ore. And I do follow iron ore companies, particularly Phoenix, now Gibson. I do follow BHP, Rio, and Fortescue. Fortescue is at an interesting level. Longer term lows, I believe, or at a support level, maybe. Yeah, it's at a support level, that's right. So that's interesting where it is right now. So the lows we saw back in September, it's at those levels. And if you go back to the iron ore chart and go back to September, iron ore hasn't reached those levels just yet. So more weakness in Fortescue right now than there is in the iron ore price. But no trend in the iron ore at all. Unlike uranium, which looks ugly, continues to look ugly. What can you say about this one? It's in a downtrend. No sign of the downtrend coming to an end. And I'll show you one uranium company. Which one? What about the bigger one? The biggest one? I'm pretty sure NextGen is the biggest one. NextGen Energy. And this one, oh, that's right. This one has dropped a fair bit. It's dropped from 1350 down to 786. And it's just reached the lows we saw back in September, just like iron ore. Anyway, so it might have just fell below those lows. Anyway, so a long-term low for NextGen Energy, which sort of makes sense because look at the uranium chart. It looks pretty negative. And by the way, the uranium price is much lower than what it was in September. So NextGen Energy share price should be lower if there was a perfect correlation. But there's not. how would I become bullish when it comes to uranium? I don't care about talk, how people are bullish about the long-term potential of uranium. I don't care. It's just a chart, and the chart looks really bearish. And I've got this downward trend line right there. It's a perfect, pretty nice downtrend line, and it's hit it. So the way you draw this is you find the high, which is back in February 2024, then the next high, which is May, and just join those two, and that's your line. And we have seen uranium hit that line, or the downtrend line, like 3 times since then, got very close another time. So that is just reinforcing that downtrend. It makes it a little more stronger and stronger, but eventually it will be broken. And that's when I might become interested in uranium, but it's well below. Price of uranium right now is well below that downtrend line. So I wouldn't be surprised to see a bit of a bounce to test that line, but at this point, no interest in uranium. What about oil? Well, I'll be honest with you, I very rarely have interest in oil. And the main reason behind this is because oil has not risen for 20 years. Now, when I say not risen, I'm meaning it is at the same levels it was 20 years ago. In the interim, or some periods during that 20-year period, you will see oil going on a bit of a run. So we saw oil going on a run back in 2007-8. In fact, that was the all-time high. We saw it go on a nice little run in the mid-2010s, a nice run in 2021, 2022. And then on occasion, we see oil prices drop like a rock. And usually, sometimes, not always, the oil price drops like a rock in bad economic times, like the GFC. Fell all the way down to $35 a barrel. But anyway, so no real massive trend in oil over the last 20 years. But in saying that, I did put this support line at about $64. That's been support for almost 2 years. And we have seen oil sort of get into that level, or that level, towards that level, or in a zone. In fact, what you can do is you can put a purple box. I do prefer support zones over support levels. And what I might do is just put it there it goes, right there. So that's between $68 and $64. And that is a support zone for oil for the last 2 years. We've seen oil get into that zone quite a few times. And those times have been buying opportunities when it comes to oil. And we're in that zone right now. It fell in that zone on Wednesday, and we did see a little bit of a rally on Friday, but then a bit of selling came in. And what I mean by selling, if you have a look at the 1-minute chart, why don't we see that? There we go. Yeah, so we did see actually oil rally above that purple box at about midnight on Saturday morning, and then fell back into that zone a few hours later. So that is what I mean by a bit of selling came in, which is interesting. The price of oil got above that box and then saw selling, which is actually fairly bearish. The rest of commodities, I'm going to go through fairly quickly. Don't have to look at gas, lithium. Coal could be interesting because we have seen a little bit of interest in coal. A little bit of a rally, a small rally in coal the last few days, but it has dropped a lot over the past few months. And you can see that in just individual coal companies' charts on the ASX, particularly like Stanmore Resources, not necessarily Yancoal, but definitely these smaller ones. The share prices have dropped a fair bit. And what else? Tin. No, I don't have any vibes about tin. Nickel, no. Palladium, no vibes about palladium, no trend at all. Cocoa has dropped a lot, and it keeps on dropping. So the drop in cocoa. And it's getting back to a bit of a support zone as well. Okay, so that's commodities. Now on to crypto. We'll start off with Bitcoin, 86,000. We've had a moving average crossover. This is definitely looking way more bearish than it has for the past 4 months after a really nice, so I suppose you could call it a really nice breakout on news that Trump was the winner of the presidency over there. So a lot of people thought that cryptocurrency would benefit from Trump in power. And I think some of those thoughts are now starting to fade away. And hence we have seen a bit of a correction, a little bit of a correction in Bitcoin, but not as big of a correction as we've seen in Ethereum. Now, one of the things about Ethereum is where it is right now. It's at a support level, and we have seen this support level hold firm over the past 2 weeks. In fact, whenever Ethereum goes below 2,100, which is a support level, and the other thing I should mention is on the 3rd of February, Ethereum actually fell to 2,100 and then rallied. You can actually see that one-day candlestick, a really long tail, and then we have seen whenever the price of Ethereum falls below 2,100, it rallies. You can see all these tails falling below that level and then rallying. However, in saying all that, it is now right on 2,100 or just above it, and I wouldn't be surprised to see a little bit of weakness and then fall below. And I think if Ethereum does fall below 2,100, it could drop a fair bit because then all that support has just vanished. So you will see traders know that 2,100 is support and they're buying. And if it does drop below that, you just lost all that buying enthusiasm. Okay, so that's crypto. What about bonds? Oh, nice little rally during the week, by the way. 30-year bonds. And it's, if we don't see this rally continue, and in fact, if we see 30-year bonds start to drop and then fall below 4.4%, that would be confirming that the bonds have moved into a downtrend. So this could be just a part of the wave. So it goes, you get lower lows and lower highs. And maybe that's what we're in right now. That little bit of a period where it goes from the low to a high, and the next high needs to be lower than the previous one, which probably won't be that hard. So I think it's really the next low. If it's below 4.4%, that would be sort of confirmation that bonds are now in a downtrend, which is not surprising. And the way to play it is TLT. TLT, which is the bond ETF. There you go. And finally, currency. It's holding firm at 63 cents. At least it's not dropping further. I'd like to see this rally a little bit more. So come on, Australian dollar, rally, rally, rally. Okay, now onto some of my screeners. Let's start off with, can't see, my camera's in the way. Let's start off with the 20, 100-day moving average crossover. Now, typically, I like to look at 25 and 100-day, but you don't have that feature in TradingView, so it has to be 20 and 100-day. But it's okay because I do get a sense where a crossover might come, because the 20, 100-day crossover actually happens before, a lot of times happens before the 25, 100-day crossover. Anyway, so Macquarie Group has crossed over. And you can see that. So we have a signal in my screener, and we don't have the signal yet in my chart, but we will have a crossover, 25, 100-day, next on Monday. This has turned negative. So pretty good looking chart for Macquarie Group since about December 2023. Price of this particular company has increased from 170 up to a high of 240. So that's a pretty nice increase for this type of company, but definitely a bit of a turnaround in the last few weeks. And it's starting to look way more negative. And also Macquarie Group looks like it's at a 6-month low. So we have a moving average crossover, 6-month low. This one looks negative, and not only that, down 5% on a Friday. Wouldn't be surprised to see a bit of a bounce, by the way. Some of the other ones that triggered in this particular screener include Transurban, although I think this one is just going sideways. Yeah, I wouldn't ponder on this one too long. Soul Pattinson, probably the same as Transurban. You're getting a lot of moving average crossovers, which is an indication share price of something is just going sideways. So you can ignore those ones. What I'm looking for is Macquarie Group, a long uptrend, and that uptrend is coming to an end. So the price of Macquarie Group could go sideways. It could drop a lot. It could even go up from here, but the signal is coming to an end. The uptrend possibly is coming to an end. Maybe not possibly, it is coming to an end. We also have Charter Hall REIT. By the way, all these have strong sell signals. Yeah, again, this one, nothing much there. Abacus Storage, Bigger Cheese. This one's interesting because this has been an uptrend for a while. Company released their full year results. Market didn't like it, and the share price has dropped since then. And this is going to cross over on my moving average or my chart in the next few days. And just like the banks, this crossed over, a positive crossover back in December last year. Not last year, the previous year, 2023. So this has been an uptrend for a while. This is exactly what I'm looking for when I'm looking for crossovers, not some of those other ones where you get crossover every month or two. And my state, so this one probably is a bank. Well, it's not. It isn't probably is a bank. It is a bank, but this I've got to say this one probably looks pretty negative as well. And yeah, this one share price of this one has dropped significantly over the last few weeks, which is sort of understandable. It's a smaller bank. I say there's a perception there's more risk in the smaller banks. You've got to get our money out of these smaller banks, particularly if the bigger banks are dropping like rocks. Anyway, so this one has dropped a fair bit. It's dropped from 480 down to 380 in like 3 or 4 weeks. And again, we've got a moving average crossover. And I think I might just leave it there for this particular screener, because after my state, which has a markup of 640 million, next one is Reef Casino Trust, which has a markup of 149.4 million. Now, in saying that, Reef Casino Trust is a strong buy on the technical rating. Let's have a look at this one. Nah, not for me. Okay, I'll look at another screener. Unusual volume. Do we really have to look at unusual volume? I don't think we do. I will look at this all the time just to see which companies had really good volume on a particular day. But yeah, I'm gonna stay off this one. Edgenico. This is what I'm looking for, but I'm pretty sure this is a takeover bid, so we can stay clear of Edgenico. Okay, and then we have a 6-month high, 1-month high, or 3-month high. I sometimes will look at all three, but sometimes you don't have to. Sometimes you can just look at a 1-month high. Which one shall we look at? Let's have a look at 3-month high. So let's have a look to see which companies out of 3-month high. There's not going to be a lot. In fact, only 93 matches, and quite a few of those are small companies, which I'm going to ignore. We have Linus. So what I'm looking for here is an interesting chart. To me, this is not interesting enough for me to be intrigued to take a position. Insignia, we can move on from that one because takeover offer. We have West African Resources, which I've already shown you. SG Fleet, takeover bid. We can move on from this one. Collins Food. So this is exactly what I'm looking for. This chart does look intriguing to me. They released something quite positive to the market on the 7th of February, must have been results. And the chart and the share price keeps on going up. And that's against the overall trend in the market. So this one looks good. I like this chart. Collins Food. We also had a moving average crossover not long ago. So I put this onto my radar when they did release that results a month ago. And this could be a buy. So this is exactly what I'm looking for. This is why I do my screeners. By the way, I already had Collins Food on my watch list. I did talk about magnetic resources in my ASX Daily Rundown video. Horizon Oil. Let's have a look at this one. Are we seeing anything to like? No. AIC Mines. I don't mind this one. Don't mind this one. By the way, the other thing I do have a look at is volume. And we have seen some really good volume in Collins Food. And as we go back to AIC Mines, and what I'm looking for is some bigger volume coming through. Subtle higher volume, very subtle, but it's there as the share price has started to move into an uptrend. So I don't mind this chart either. Company I've never heard of before, Green X Metals. Nah, not for me. And Tipper Minerals, not a bad uptrend, I'll give you that. Nido Education, not sure about that one. We have Reese Casino Trust, Globe International. No, we can move on. We also have PRL Global. Now we can move on. EnviroSuite, takeover bid, we can move on, I'm pretty sure, yep. And then Melbana Energy. Something's happening here with Melbana Energy. Share price has really taken off in the last week. This needs further study, I think. I'm going to put this on my watch list because this is definitely one I do not have on my watch list. Brisbane Broncos had a pretty big win the other night. I stay clear of those sort of companies. And Q Energy, this will be the last one, I think. And Q Energy, not for me. Okay, so those are some of the companies that have screened. So really interested in Collins Food. That's probably at the top of my list among these companies that have popped up. I also have another watch list called Buy Australia. And these are just companies that are on my potential buy list. And there's quite a few companies I like here. I don't mind Telstra. Don't mind this one. I actually do like Telstra's chart. EVT chart, I do like this one as well. What else do we have that I like? Vista Group, this one's pretty good. I like this chart. What else? Dusk Group, they released results. Results pretty good. I like that chart. What else? APA Group, I do like this chart as well. I think this is a pretty good chart. And we're also going to have a moving average crossover. Going to happen very soon. NIB Holdings, maybe getting there. Media, I do like this one, but not sure about the company itself. And what else? City Chic pulled back a little bit. Well, actually, not that much. This could be interesting play soonish. Oh, and the Reject Shop. I don't mind this one at all. It has pulled back a little bit, but that could be a nice little buying opportunity. I did like the half-year results, by the way. And what else? We have Megaport. Looks pretty good. Has pulled back. I do like that there hasn't been a massive amount of selling coming in. I do like that. So this is actually looking intriguing, along with A2 Milk. This one looks really good. I was waiting for a pullback. The pullback has not happened. Waiting for the pullback to $2 or $7.10. It just hasn't happened. Okay, so that is all I have for this particular video. Technical update. If you have any questions, any thoughts, leave those in the comment section of this video. That's it. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.